Well, hello folks, welcome back to another edition of the Forex Weekly Forecast. My name is Alexander Nikitin, and today we're gonna go over a little bit of analysis. If you're very new, this is gonna be a good exercise for you in understanding how to look at the market, how to decide whether the market is bullish or bearish, how to come up with some ideas about what to trade and how to plan a trade. And if you've been with me for a while, this is going to be an eye-opener for you, because today I'm going to give you something that lots of traders would spend thousands of dollars to know about. So let's go, and I will reveal this secret. In a word, what I'm going to tell you about is called structure. And let me have some empty space on my chart to illustrate my thoughts. Okay, taking some lines. What structure means? Structure means a point where price action changes its direction. It is very simple. If you look at the chart, you will see that price was moving to the upside, and then suddenly something happened and it started to move to the downside. So this point where the price is changing its direction is called structure point. Okay. Then the price changes its direction once again, and we have another structure point, like that. So these are structure points. Then the price changes its direction once again, and we have another structure point. Boom, boom. If these structure points are situated like in that manner of highs, higher high, and then lows, followed by higher low and higher low. The structure points situated in this manner. We have an uptrend. If they situated vice versa, lower low, lower low, low low, followed by lower high, lower high, lower high, then we have a downtrend. Downtrend looks this way. A refresher for those who's been with me for a while. So these changes in direction are called structure points. Okay, today I will mostly speak about how to identify good structure point versus other points where the price changes the market that are not that very much important. Okay, when you know structure, it is the same as you know the language the market speaks. If you know the language of the market, you can predict the movements. Okay, and how can you use structure in your trading? For example, you have found some point where the market changed its direction, and you have a thought that resistance is the line where price begins, where price is sold. So next time when price comes to this point, again to this level, it will most likely bounce to the downside again. So this is called bouncing strategy, and it is based on resistance. And what is resistance? Resistance is just a horizontal line that is drawn using the structure point, that is drawn through the structure point. When you've identified the structure point, you just put the horizontal line and wait until price goes to that horizontal line and you sell it, placing your stops above and somewhere here, boom, and your targets somewhere here. So very good risk reward. Or maybe you can use it differently. Again, you have identified your structure point, you have placed your horizontal line that is that tells you what is the price of this structure point. You can look at it here, and you are waiting for some signs of violation of that structure. For example, the candle that has a higher high and higher close above this structure. So, and you have an idea that is written in your trading plan, and it says that broken resistance now should turn into a support. And what you do, you just wait until price goes to that broken structure point, broken level, you just buy it here and anticipate further continuation of the trend. In this case, you place your stops somewhere here below the previous most recent structure point, and you can place your target whatever you wish it to be. Just looking for some structure, maybe somewhere here you'll have some other structure, or maybe looking for some structure on high time frames. If you trade hourlies, it will be very good to look for some targets that are usually identified as structure points on daily. Okay, so this is the example. What is the next example of that? Well, okay, this is a very good thing. Let me demonstrate here. For example, you have an idea that markets are channeling, yes? So you just unite two structure points. Boom. If you unite two highs, you'll have an up border of a channel, and if you unite two lows, let me unite this low and that low, you will have a down border, and you say, okay, now I have a channel. Let me have it green, a bit different color. Okay, so I know when price goes to the channel, to whatever border of this channel, it usually bounces, and you buy it from this trend line in anticipation that it will move to the next trend line, something like that. And this is again the example of how you use these structure levels. Okay, what other methods of trading structure points? Easily. Almost all the strategy, every strategy is based on structure points. If you do not know how to identify structure points, you cannot use the strategy. It means you do not understand the logic of the strategy, because trading by itself means that you are looking for buying lows and selling highs. So you need to identify highs and lows first before you start trading. You need to know, you need some tool that will objectively say, tell you, okay, this is the low and this is the high. Because what is high today may easily be turned into a low tomorrow as compared. So you maybe not be objective in it, but if you have some solid rules in a identified structure, you will be, the market itself will tell you what is the low and what is the high. Okay, what other things? For example, you had this structure point and then you had that structure point. Okay, what you do, you just stretch your fibs like this. You say this is a very solid structure point, this is also a very solid structure point. Let me enable some the level 382, 5618, whatever, 886, and you say, okay, price has touched 50, let me wait for another retracement of something like that, and I will be waiting for a retracement back to 886, and this will give you the so-called XABCD pattern, something like the XABCD pattern. Depending on the rules, it may be a harmonic pattern of Scott Carney, something like bat pattern or perfect Gartley pattern or whatever, crab pattern, or it may be an advanced pattern formation of trading powered guys, or it may be a unified Gartley of myself, or it may be just an XABCD pattern that has the ratios that you have tested, you have verified, and you know that you can repeat the results of your testing, of your research in the real-time market. But the common thing here is that you find the very solid structure point at X. So this should be X. And the idea is that the retracement is very deep enough, but it never violates X, and you will have a bounce of that zone, that previous support zone, if tested, something like that, previous support zone, if tested, should hold, and you will have a kind of reversal here, and this will be turned a low, so you buy low in anticipation to sell high then. Okay, another example of that, how to use structure points. Okay, so Now you know that almost every strategy is based on those structure points. Knowing how to identify them is the key to technical analysis. Okay, let's go to the market. Let us not go to the market. Let me first give you some theoretical knowledge on how I personally identify the structure points. For example, I have this, then I had a retracement, just a reversal, small reversal of direction, then I had a violation, then I had small reversal, and then I had this, and then I had that, then I had this, and then I had that. I'm just drawing a random markets. Okay, like that, like that. Okay, I have a very solid knowledge of how I do identify my structure. First of all, the retracement or whatever pullback after the turning point should have a zigzagging structure. Those of you who doesn't know what is zigzagging structure, go to my swing identification technique video on my YouTube page, and you find this video and watch it before you continue. Okay, the next is here. They all should have a zigzagging structure. This is the first sign of that the point where the price changed its direction is a very good structure point. This is the first sign. And the second point is the size of that correction of that pullback or whatever. So my personal rule says that the size of a good structure point should not be less than half of average size of previous 3 structure points. Let me have something like that here. If you look at it here, it is 300 here, 400 here, and 320 here. So the average of this will be 300 something. Let me calculate. Oh, I don't have calculator here. It will be 320 or something like that. And if you need half, you divide that 320 by half. It means that the next correction or whatever should be not less than 150. And if you meet those small pullbacks like that, yes, you say, okay, it is very small. It is not 150, so this structure point is also not very good to start some drawings, these structure points. So we can ignore this movement and treat that movement as a single, ignoring that small movement, because this correction is small. Why is it small? Because it is less than half of 3 previous correction sizes, average of 3 previous correction sizes. How do you calculate the average? You add this, this, and this, and then you divide them by 3. This is how to know the average. So if it is less than half of the average correction size, then it should be ignored. According to my rules, according to how I objectively identify the strength of a structure point. Not only zigzagging structure, but also the size of a pullback. So how far the price bounced off that level, what strength this level has is measured by that previous correction size. Okay, and I call this method, let me tell you, and I call this method, oh well, where is the drawing? An ACS, which stands for average correction size. In your trading, you can use whatever period of this ACS. I personally use ACS-3. It means I calculate the average correction size of previous 3 corrections to know if the next correction is good or not, or it should be ignored. You can use 5, you can use 10 period, like moving averages. Whenever you have a new item, you discard the first one and you add the next one. So this average correction size is moving and constantly changing, adapting to the market by itself. If the market becomes more volatile, the corrections becomes deeper, yes, and the ACS becomes larger, so you will ignore more noise which takes place within these legs. And if the market becomes more quiet, something like that, it is not moving very large distances. The ACS slowly becomes less and less and less, adapting to the changed market conditions, and you will detect smaller and smaller corrections. So it is easier like that. Easy like that. ACS. So average correction size is the tool that I have personally invented. You will now find it anywhere on the internet. It is based on my market research that I've done, backtesting the markets, backtesting the different pairs, backtesting Forex, backtesting some CFDs, some futures, some other markets environments. Okay, some other charts. Let's go to the live markets to see how it works. Go in here. Let me delete all that stuff. Let me go here. Well, let me also delete this wrong line. Sorry for that. And okay, let me start some randomly from this large swing low to swing high to swing low. If we go here, this is the moment from swing high to swing low. Then the next one is here. Why is it here? Because it violates this structure point, violating that. So we cannot ignore this. Then we go to the downside. The picture is very obvious. I ignore this movement because it didn't violate the structure. Also, the first one is here. The picture is very obvious, yes. After that, we had this one to the downside, boom, and then we have another one to the upside. So let us calculate. This was the first movement, that was a correction if compared to the previous movement. This was the second movement, and that was the correction is compared to that second movement. If you don't know what is the correction or what is the pullback or what is the retracement, go to my videos of trend identification, how to identify trends, and extract that knowledge out of my video. Okay, let me calculate those size of corrections. Let me have an ACS-2 because I don't have ACS-3 visible on the market. ACS-2 tells me 409 and 644 pips. 409 plus 644 pips divided 2 equals 526 is the ACS. And my rule says that the next correction should not be less than half of that ACS. If the ACS is 526, then the half of ACS should be divided 2 equals 263. Okay, what I need first in the market, I need to wait until price either violates or touches the border of the last impulse, and we have it here. We don't have it here, we have it here. You see, touching the last structure point, and after that we had a pullback. So this pullback means that that was a good structure point. Why is it good? Because it is more than 260 something. Yes, it is 400. Okay, now we have 3 corrections, 1, 2, 3. And starting from this, we will calculate ACS of 3 only. Okay, let's go next. What is it? Violating the previous structure low and then having a pullback. Pullback to the upside. So let's calculate if this pullback is okay. To do that, I need to sum all that 3, divide by 3 and divide by 2 to know the half of average correction size of the previous 3 corrections. 409 plus 644 plus 496 divided 3 and divided 2 equals 258. If this correction is less than 258, then I should ignore it. What we do in this case? We ignore nothing because it is 401. This is a good correction, and this is a good structure point. Okay, moving next, let's go. Now we discard that correction size, and we take only this 1, 2, and 3 corrections. Starting from that 1, 2, 3 corrections, we discard the first, we take the last 3, 1, 2, 3. To know if this pullback should be considered a good correction. What we need to do, we need to measure that first to know, okay, it is 308. What I tell you guys, because previously we calculated that correction size, and we know that the correction half of ACS should be about 258, so it is obviously that 300 will be good. Okay, let me just do not bore you with that calculations. Okay, so now correction size becomes even smaller. We have 400, 400, and 300. Okay, so let's do it this way. I'm taking these points because they are changing the direction. Okay, 345 here, then plus 308 plus 409, and we have 100 divided by 3 divided by 2 equals 175. Okay, so and here you will see how it works. You see that price changes its direction here? Yes, obviously you can see it. You see the zigzagging structure? Yes, you obviously can see the zigzagging structure. So should you take this retracement? Should you decide this to be a good structure point and this also to be a good structure point? You need to calculate that average correction size, and as I calculated, half of ACS now equals 175. If this is less than 175, then I need to skip this. What is the number? 139. So this correction should be ignored, and you go next. You skip that and go to the next one. So you cannot start drawing any patterns from that point, something like that. You cannot do that, because this structure point, X point, is not strong point. It is a very weak point, not strong point. Okay, next correction then takes place here, from the lowest low to the highest high, before we have a violation, to here, boom. Okay, ignoring this because we do not have any zigzagging structure, and also it looks like a very small movement. Okay, so next violation of either this or that range is taking place here. Yes, and before that we should look at some deep retracements. Okay, should we take this one? Should we take that or that? Let us first calculate the average correction size of 308 plus 345 plus 589. These are all three previous corrections. So I need to divide them by 3 to know the average, and divide them by 2 to know the half. Okay, 207. And what I see here in this market, I see that market moved to the upside, tried to violate that but didn't reach the point. Then we had a good retracement to the downside. Frankly speaking, we had a little bit of channeling, a little bit of something of 509. 500 means 1 ACS. And after that we had a violation to the upside. Okay, so when we are looking for some corrections, for some trade in between this large range, for example, we had this impulse to the downside, and the next point to violate that is here. So logically we should draw the impulse like that, the initial point and the final point. But this impulse is separated with a correction side that is not only half of ACS, but that which is full ACS. So when in this situation, I do not wait until the price violates either points of the previous impulse, and I cannot ignore this very important correction, because the ACS, one ACS and half ACS is very important things. So if we have a trend continuation, half of ACS is enough. If we have a kind of trend reversal, a reversal that takes place within the previous impulse range, then half of ACS is not enough, and we are looking for full ACS. Okay, once we have identified our swings, that was a correction, kind of impulse correction, and the second one is impulse for sure, because it violated the previous movement. So starting from this, let's begin to calculate stretching the fibs from the structure point to the next structure point. What is that? It is the change of direction here and another change of direction here. And if you look closer to that, if you look closer to this, let me mark some minor structure movements, not the major that we calculated. You will see it 1, 2 to the downside, and 3. And something is holding this level. So we have some problems violating this level and continue the downtrend. See that? And if we stretch it to the level to left, you will see it is going to, let me take that horizontal line. Okay, boom. So the level is looking very good. The level is looking very good. So to hide some stops below this level is a very good idea. So we have identified a very good structure point. It was previously tested as support, again was tested as support, tested as support, tested as support, having that spikes, but we didn't have those very good continuation of the downtrend. We bounced, maybe a kind of false breakout, but it doesn't really matter. We have tested the zone of that support. So from now we are looking for another test of the support level, support zone, I would say. So from somewhere here, I'm going to look for some buying opportunities. Okay, how can I do that? Easily. I just calculate my ratios for unified Gartley. From X to A, this means from the last identified structure point to my last structure point on the market, from previous structure point to the current. Okay, then I'm looking for retracement at least to 382, and we have 50. Then I'm looking for another retracement at least to 382, and we have 0.931. And then I'm looking for 382. That will be completed right here. You will have it at 1.4168, somewhere here, 1.4168 for buying. Okay, so this is the way I am identifying the structure points. So first of all, the structure is solid when we have a very significant bounce of that point, of that level. If the bounce was not very significant, then the structure is not solid. Well, let me do it this way. See how it works. Remember I told you about those channels? One structure point, two structure point. For example, you didn't see that before. And you say, okay, let me buy it every time it goes to the lower border of the channel, and sell it every time when it goes to the higher border of the channel. So you sold it here, placed your stops above the previous high, and then you bought it here. Look at that, how it works. Boom. then you bought it here, and then you sold it somewhere near the higher, and again. Well, there are good strategies on channel trading. I don't personally use them. I don't have any solid rules for them, but the idea is very good. And it is, of course, based on the rules on identification of good structure points. So these rules of ACS calculation are very good for you to look at that structure points. You will never see, okay, it looks like a good correction, it should be a good correction, shoulda, woulda, coulda, whatever words. You can use that. You say, oh, we had the structure point here, and now we have a little bit of retracement. If you look left, it is the testing broken support, so let me draw something starting from this level. No. These calculations, these rectangles tell you when the structure is good and when it is not good. Maybe previously, starting from this level, the structure was good, but today it is not good. So the market condition has changed. Market participants has decided that this structure level is no more good. Okay, so we have a movement that followed by a very deep retracement that tells me that this structure is very significant. This turning point is very significant because it was followed by full ACS movement to the downside. And then we had it with this very significant movement violated to the upside. So this tells me that an uptrend started. So I'm looking for bullish opportunities on this pair. And one of these bullish opportunities is buying at 786, retracement from X to A. Of course, we need those A and B and C points installed also. Okay, my personal targets are 382 from here, from the highest close to the entry point, and 618. I'm using 618 very rare, so 382 will be looking good. It would be a kind of B point retest or something like this formation, this minor structure retest. Why not? Very good. Once we have violated to the downside, we should go to retest the broken support, something like